Welcome to Piston Pundit, your ultimate pit stop for industry-shaking updates. Today's turbulence begins with Ryanair, the European budget titan threatening to cancel a colossal $30 billion deal with Boeing. Why? Rising U.S. tariffs could price Boeing out of contention, opening the door for China's COMAC jets to taxi into view. This isn't just contract drama, it's a geopolitical shift in the making. As the US-EU trade spat escalates, Boeing's grip on global skies may be slipping, and COMAC is circling the runway. From powertrain politics to fleet realignments, this story goes beyond aircraft. It's about dominance in a rapidly changing aerospace world. Let's dive into the storm. Tariffs and tensions. Ryanair fires its opening salvo. Ryanair's $30 billion threat to cancel its Boeing order is rooted in intensifying US-EU trade tensions and looming retaliatory tariffs. In a blunt letter to Congress, CEO Michael O'Leary warned that if new US tariffs raise Boeing's costs, Ryanair would reconsider both its existing orders and future purchases. With 330 Boeing 737 MAX jets on the line, this isn't posturing. It's a direct challenge to both Boeing and US policy. The US is preparing tariffs on European goods, while the EU is targeting $114 billion in American aerospace exports. Ryanair argues higher aircraft costs will translate to higher ticket prices, something low-cost carriers can't afford. O'Leary's negotiating playbook is nothing new. He's used Airbus as leverage before. Now, he's publicly entertaining China's COMAC C919, saying he'd consider it if it were 10 to 20% cheaper than Airbus. That statement struck a nerve in Washington, triggering concerns among lawmakers about China's growing footprint in commercial aviation. With rising fuel prices, inflation, and tight profit margins, Ryanair holds a strong hand. By using COMAC as a pressure point, the airline's message is clear. Boeing must absorb the cost or risk losing one of its biggest and boldest customers. And the aircraft at the center of this strategic threat? Let's take a closer look. COMAC C919, the Challenger warming up the engines. The COMAC C919 is China's bold attempt to challenge the Boeing-Airbus duopoly. Launched in 2008 and entering service in 2023, it seats 156 to 168 passengers, aimed squarely at the Boeing 737 MAX and Airbus A320neo. Around 25 aircrafts have been delivered so far, including test models. Its biggest hurdle is international certification. The European Aviation Safety Agency, EASA, estimates it could take 3 to 6 more years for approval, pushing EU entry to 2028 to 2031. That makes COMAC a long-term threat, not an immediate competitor. Production is another constraint. In 2024, COMAC delivered only 13 jets and hopes to produce just 30 in 2025, far behind Airbus and Boeing. Scaling up to 150 annually is an ambitious goal still years away. COMAC also depends heavily on Western components. Its LEAP-1C engines come from CFM International, a GE Safran joint venture, and other critical parts are US or EU made. Any export controls could threaten the program. Despite these challenges, China is pushing hard. With state support and possible EU cooperation on the horizon, COMAC aims to become a serious third player, one that could eventually reshape the global aviation landscape. But while COMAC builds toward long-term dominance, Boeing is facing short-term fallout, and it starts with one of its biggest customers reconsidering everything. Before we get into Boeing's mounting financial pressure, take a second to subscribe to Piston Pundit. Hit that like button and ring the notification bell so you never miss out on the latest vehicle updates and industry power plays. Your support fuels this pit stop. Boeing's high stakes, lost revenue and bolts. This isn't just about one customer walking away. If Ryanair backs out, Boeing faces a multi-billion-dollar storm. In 2024, Boeing's commercial aircraft division pulled in $23.2 billion in revenue, and Ryanair's long-term order represented a hefty chunk of that future. Yes, airlines rarely pay sticker price. After typical bulk order discounts, Ryanair's deal is likely worth closer to $20 billion. with Boeing's profit estimated at $5 to $7 billion once manufacturing costs are accounted for. And that's not including the aftermarket goldmine, parts, pilot training, maintenance contracts, the kind of recurring revenue every aerospace CFO dreams about. If the deal collapses, Boeing could take a significant stock hit. Analysts predict a 5 to 10% drop in share price, not to mention potential layoffs across its supply chain, already stretched thin from pandemic setbacks and past MAX disasters. More broadly, this would be a symbolic gut punch. Boeing's already fighting an uphill battle to restore its reputation. Losing Ryanair, one of its most prominent and aggressive buyers, would be a red flag to the entire industry. It says, if Boeing can't keep one of its largest customers on board, who's next to walk? And that leads us to the deeper game Ryanair is playing, leveraging COMAC not just to shake Boeing, but to force policy conversations on both sides of the Atlantic. Ryanair's high-stakes gamble with COMAC. Ryanair's interest in COMAC is as bold as it is calculated. With 96% of its fleet made up of Boeing 737s, the airline benefits from uniform training, maintenance, and logistics. Switching to COMAC's C919 would mean new simulators, infrastructure, and supply chains, a costly and complex shift. Still, CEO Michael O'Leary has made it clear, if Boeing prices rise due to tariffs, Ryanair may embark on a new adventure. Cost pressure, not convenience, is driving the conversation. Realistically, a COMAC transition would likely be gradual. The C919 lacks EASA certification until at least 2028, and production is limited, only 30 units expected in 2025. A logical start could be testing the aircraft with its Lauda subsidiary. Some critics call this a bluff, but that's precisely the leverage. Ryanair's public flirtation with COMAC pressures Boeing to adjust pricing and signals to U.S. lawmakers that tariffs could have real consequences. At its core, this move reinforces Ryanair's position. It will protect its razor-thin margins at all costs, even if it means shaking up its entire operational model to do so. And Ryanair isn't operating in isolation. This play has ripple effects across Europe and beyond. Global reverberations in trade and aerospace power. Ryanair's potential shift away from Boeing is more than a business move. It's a turning point in global aerospace politics. The ongoing US-China trade war has already disrupted Boeing deliveries to Chinese airlines, while the EU prepares retaliatory tariffs on $35 billion in annual US aerospace exports. Ryanair's stance could trigger a broader reassessment among European carriers. Airlines like Lufthansa, EasyJet, and Air France have expressed frustration over rising costs linked to trade tensions. If Ryanair pushes ahead, others may demand better deals, or consider new suppliers like COMAC. COMAC's C919, still years from EASA certification, represents China's bid to challenge Western dominance in aviation. A Ryanair deal, even symbolic, could elevate COMAC's global standing and reshape the narrow-body market into a three-way race. However, COMAC's reliance on Western components like LEAP-1C engines exposes it to U.S. export restrictions. Its lack of a global service network also limits its readiness to compete with Boeing or Airbus. The message is clear. Airlines aren't just buyers anymore. They're geopolitical players in a sky-high chess match. Still, the winds are shifting, and Ryanair's bold move may signal a new altitude for global aviation dynamics. Final lap, the narrow-body game, Reimagined. The Ryanair-Boeing standoff is more than a contract clash. It's a stress test for global aerospace. Boeing faces billions in potential losses and shaken confidence, while Ryanair flexes its leverage, dangling COMAC as a long-term disruptor. The C919 may still face hurdles, but its presence alone is shifting the balance. So let's ask, do you think Ryanair is bluffing, or is COMAC a serious contender? Can Boeing afford to call that bluff, or will it blink first? And what happens if tariffs keep reshaping airline decisions? We'd love to hear your take. Drop your thoughts and experiences in the comments below. Don't forget to like, subscribe, and hit that bell so you're first in line for the next big update here at Piston Pundit. Thanks for riding with us. And while you're here, check out the other videos on screen. There's plenty more to explore.